We got a kilo of gold, right? What does a kilo of gold go for today?
Oh, I don't know. How many ounces in a kilo? I forget.
What is it?
Gold ounces in a...
So this is...
2.2 pounds is a kilo. 16
So that's a
ounces.
kilo of gold, right? So this is right now $77,000, right?
All right, so you giving that to me?
No, I'm not.
Is that
it's
a
a
gift
prop.
or-
It's a prop. You can really hurt somebody with this with the weight of it, right?
I know. You should see how much my bracelet weighs.
Yeah.
It's like I get a workout with this thing.
So that
Here,
right there.
Hand me your bracelet for a second.
well, I guess it's a, I got to take the clip off. It takes a while to keep it secure.
Is it this? No, it's not this. Yeah, so I don't know what that sound came from. So I don't know if I touched anything or not, but okay. So you have this here, which is kilo of gold, right?
Yeah,
you got
but
these collectible cards, one of ones. Each of these are between $1 million to $500,000 to $1 million
Really?
cards. All these, each of these, yes.
What kind of cards are those?
So one of them, you got Joe Burrow's one of one, National Treasures, RPA, with its jersey and its sign. This one is a 1932 Babe Ruth, 33 Gaudy Babe Ruth PSA 8. And this is one of Zion's biggest cards. It's 1 of 5, PSA 9, BGS 9. So each of these are between $500,000 to $1 million. So you have choice. You got $1 million of gold. You have $1 million of collectible cards. But you got $1 million of Bitcoin on this phone when you carry. Okay? Do you see the argument on how they sell Bitcoin transferable? If you had a choice between $1 million between the Bitcoin in your wallet, the gold, or the collectible cards, what do you choose?
Well, I don't know that much about the collectible card market. I figure that the spreads are probably pretty wide there, and the market is very dependent on the collector demand. I mean, whether there are people who want to buy those cards or not. I mean, it's a unique market. I have a good friend of mine in Puerto Rico has made a ton of money on cards. Now he's in jerseys. He's buying the jerseys of the players. But look, I don't know that market, so I would just take the gold. I mean, the gold is pretty stable. I think the price is going a lot higher, very liquid. I don't have to worry about a lot of different factors that might impact the value of those collectible cards. But I would take those cards over the Bitcoin.
You would take the cards over the Bitcoin.
Well, I don't think the Bitcoin has any real value at all. I think it's just a speculative mania. I mean, sure, there are fools out there who will buy Bitcoin who don't understand that it has no value. And as long as there's a supply of greater fools, the fools that bought earlier can sell out to a greater fool who buys later. But, this is a...
Do you think Michael Saylor and BlackRock, they're fools?
This is a blockchain letter. Like a chain letter, only with a blockchain. It's a digital Ponzi or a pyramid. Do I think Michael Saylor is foolish? I don't know, why Michael Saylor does what he does. I mean, obviously, he levered up his balance sheet to buy a bunch of Bitcoin. He'd been selling his own shares in MicroStrategy stock, which obviously they did go way up because of this position that he's taken. I mean, ultimately, I think MicroStrategy goes bankrupt. I mean, I think that's how...
You think so?
Yeah, I think eventually the Bitcoin is going to crash and the creditors are going to end up with the company. I mean, that's what I think is going to happen at the end of the day. And I think one of the reasons that he keeps buying Bitcoin with more borrowed money is to help prop up the price. I mean, he is one of the major buyers. And, they just suckered in a new group of people in these ETFs who are just pure gambling. Because if you're buying Bitcoin on an ETF, you can't even make the argument that someone's buying it to use it as any kind of currency. You're simply gambling on the price because you don't even have the keys. You don't have custody of it. You're paying some Wall Street firm to hold on to your Bitcoin. So the people who are buying these ETFs, these are not the diehard, crypto fanatics, the maxis, the gold diamond hand, hodlers. These are, more short-term traders who will just jump on a fad if they think they can make some money. And, now you've got a very significant percentage of the float of Bitcoin now in these ETFs. But unlike, the old Grayscale Bitcoin Trust, where the Bitcoin went in and they didn't come out, they were trapped, which is why it traded at a 50% discount when people wanted out. When the speculators who bought these ETFs decide they don't want them anymore and they sell, those ETFs have to take their Bitcoin and sell them into the spot market. There won't be enough liquidity to absorb that selling. The price is going to crash. And what's happened in prior Bitcoin crashes is all of a sudden the supply of Tether just increases. And Tether comes in, people come in and use Tether to buy up a bunch of Bitcoin. But when these ETFs get the sell orders from their customers who decide to get out of the trade, cut and run when they're down 20 or 30%, and they decide, I want out of this trade, and now BlackRock or all these companies have to go into the market and sell Bitcoin at the market that day to settle by the end of day in U.S. dollars. No Tether. They can't send Tether to their customers. I think it's going to be the biggest crash we've ever seen in Bitcoin. The smart money has been selling their Bitcoin to these ETFs ever since they launched.
Brandon, what do you think? Young guy, what do you think about this?
So, Peter, would you agree that over the course of history that security has been a valued commodity, just in general, like security?
Keeping things secure, protecting things.
Protecting yourself, protecting your money.
Sure. I mean, there's a whole business in protection, right? People value protecting things.
Yeah, always been valuable. What about transportation, ease and speed of transportation?
Yes, of course, transportation is valuable.
So I think that's the argument for Bitcoin is that, I'm of the mindset it's not something to go all in on, but it's exposure, like a 5% exposure is something that you could store safely and transport easily.
I understand that you can easily transfer Bitcoin. The reason it's so easy to transfer is because you're transferring nothing. So if I'm transferring nothing, I could do it at the speed of light, right? If you want to transfer gold, you're transferring a physical object. But what you can do with gold is you can tokenize it. I can take my gold and put it in a vault, and the vault owner can tokenize it and say, hey, this token is evidence of your ownership. And if you send the token to somebody else, they own it. I can send a digital gold token across the world cheaper and faster than you can send Bitcoin. So you don't need Bitcoin to do that. And of course, there are 20,000 other cryptocurrencies. There's nothing special about Bitcoin other than the fact that it's called Bitcoin. and it was kind of the first one. And so you have kind of the biggest network that right now all believe that it has value. But there is no actual value behind that belief. It's just based on everybody else believing a lie. And the question is, how much longer will everybody believe it? And you don't need everybody to stop believing. You just need a significant percentage of the believers to change their mind. And then you also run out of buyers. I mean, in fact, one of the reasons that they got these ETFs is they were out of buyers. They didn't have any more buyers in the real world, so they had a sucker in Wall Street. They had to get some of the money that was invested into these ETFs.
You think that's the reason?
Yeah, of course. That's why all the people in Bitcoin, their full-time job is to find new buyers.
No, I don't think that's the case because think about it. So the argument some people are making is actually the opposite. The argument they're making is that those guys got in either from, let's say the reason why you're saying it is one. Yeah, they're trying to really promote us, so they got to go find the money. Okay, let's put that as one of the options. Two is fear of missing out, FOMO. Oh my God, let us get in before this thing goes to 250,000. We better get in there, right? Like what, some of Larry Fink and these guys are talking about. Three could be this is their way of getting in to have control over it. This is their way of getting in to be able to have influence over it.
It's not, look, Wall Street sees an easy way to make a quick buck. There's a bunch of fools who want to buy Bitcoin and they can charge a fee. Wall Street will sell the public whatever the public wants. They've got no morals, really. It's just like they'll make a buck any way they can. And that's what's going on. But, the FOMO is real. But remember 3 years ago when Bitcoin first got up near 70,000, right? And everybody was saying it's going to 1 million. They had the laser eyes for 100,000. They were buying Super Bowl ads. It was nonstop. I mean, the biggest advertisers on networks like CNBC are crypto companies. Nonstop advertisement. Then you got El Salvador, getting involved in Bitcoin. You got the NFT market. You had all this hype. And what happened to Bitcoin?
I agree with NFT.
It went from almost 70,000 down to 16,000. The only thing that caused it to go back up was all the speculation over the ETFs and then the launch of the ETFs. So now you've got this new thing, but it's the same old hype again. The same people are back on television, $1 million Bitcoin, pie in the sky predictions. Meanwhile, it's not going anywhere. They're hyping up this halving. That's another bunch of BS. We're getting ready for another big dump. It's all about pump and then dump. And when they pump it up, yes, they generate that fear of missing out, and people get suckered into it. But I think, as I said, the guys that own it now in these ETFs, even though one of them has actually got HODL as the symbol, these are not HODLers. In fact, if you look at where the money came from to buy the Bitcoin ETFs, a lot of it actually came out of gold. The gold ETF saw huge redemptions in the few months following the launch of the Bitcoin ETF. And I think some gold people that, got tired of waiting for gold to go up, did FOMO into the Bitcoin ETF. I think a lot of people that own gold stocks, that's why, gold stocks were getting crushed. I was watching gold stocks go down about 15% after the Bitcoin ETFs were launched, when gold didn't go down at all. It's like, why is this? Why are people selling off these gold stocks? It was probably, all right, well, let me sell my gold stock. I'll buy this Bitcoin ETF. So that money is not there forever, especially when they start to see gold really going up. The gold stocks, gee, maybe I shouldn't have switched. Maybe I need to go back. It's going to be like a Roach Motel. Your money checks in, but it doesn't check out. Because when you try to sell, if enough people try to sell, the bottom is going to drop out because they have to go into the market. And actually, too, I think one of the things that's been supporting Bitcoin temporarily is a lot of hedge funds are shorting MicroStrategy stock and buying Bitcoin. So that's some of the Bitcoin buying is because of MicroStrategy selling. But when they unwind those trades, because MicroStrategy stock collapses, they have to buy back their MicroStrategy shares, and now they have to sell their Bitcoin. So that's another big potential seller of Bitcoin is the closing out of the MicroStrategy short.
What percentage of your portfolio is gold right now?
Well, if you count my gold stocks, it's a lot. I mean, I basically keep approximately 50% of my personal stock portfolio in precious metals mining stocks. And the other half is in more traditional, although my second largest allocation is the energy sector. But I have a more traditional value-oriented dividend approach. It's almost all non-U.S. stocks. I mean, I own a few U.S. stocks, but not many. It's mostly foreign stocks that are in that.
You own more foreign stocks than U.S. stocks?
Oh, by far.
Tell me why. Why is that?
Well, one of the reasons is I want to get out of the dollar, right? So these foreign companies have most of their revenues that are not dollars, so I like that, and they're not priced in dollars on the exchanges. In general, you take a foreign company with the same earnings as a U.S. company, it trades at a lower PE and has a higher dividend. So U.S. stocks have a premium because people just assign a higher value to them, and I think that will change. Also, I have exposure to emerging markets, and if you look at emerging markets and you look at the history of emerging markets, they're about as cheap as they've ever been in relation to developed markets. But also, if you look at the U.S. market over the last 10 or 20 years, it has so outperformed the rest of the world. But our GDP, we're a smaller part of the world's GDP than we used to be, but our market cap is a much larger percentage. So our stocks are very overvalued, and I think we are headed for a unique currency crisis, sovereign debt crisis. So I want my investments to be out of harm's way.
Okay, so
I'm very worried about the U.S.
Okay, so great, fair enough with your mindset on that.